World markets rose while the euro strengthened as the ECB meets today to decide on interest rates. Australia's GDP numbers helped as they were surprisingly to the upside. Futures are indicating a higher open. Can it be sustained? I'm Taylor Schranz, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the Morning Call Express. The markets are rallying this morning. Australia's GDP was much better than expected, twice the rate of what we saw last quarter. And on top of that, we've got the ECB meeting today, and I think a lot of people are expecting some sort of stimulus or some sort of big plan to come out of that meeting.
I think expectations are high, and you also have a bit of an oversold market. We've come from 1420 down to 1270, so any kind of incremental good news is going to help. And obviously markets trade, so institutions want to deliver or get out of stock. And we've talked about how typically markets dance around the 200-day moving average because they want to get short, long, they want to distribute stock, and that's what traders use. So yesterday we closed above the 200-day, giving you a sign that you should cover some shorts and look for a tactical buy. Now the question is, where does the rally go to, and what area will people try and put more shorts out if they covered into the early week's weakness, so to speak?
Yeah, so is this rally buyable, or do you short it today?
I think a lot of traders are going to come in and be a little bit frustrated because you had to take some risk overnight to be involved. And at this point, I think that's been the trend here. Is not a lot of things are happening intraday. They happen overnight, so traders have to learn how to deal with it. If you look at the chart here of the SPX, you will see that the patterns have been very obvious. You had the head and shoulders top, met the measured move. Then you had this continuation bear flag to the downside. So finally on Monday, you had a bit of a reversal bar. Then yesterday we closed on our highs for the first time. So showing you there is some money coming back in. We saw some relief in the bank, some participation in some of the leaders. So for me, I'm going to map it out. I'm probably going to be selling my tactical longs into this 1298 area. And then I'm going to see if I could lay out some shorts, because I do think this is going to be somewhat of a rally to be sold anywhere between 1307 to about 1313. So I do think this is your easy trade, or this is the bounce that won't need that much support or that much better news. And then if we do start to see a coordinated effort that's perceived as possible, this would be the area that the bears will probably defend.
This market's been a story of the haves and the have-nots. Some stocks have been really good to hold, while others have just been terrible. One name, Apple, it's a high beta tech stock name we've been watching very closely. It's been hanging in there. It's been able to hold.
Yeah, Apple's been one of the haves in high beta tech. It's above the 100-day. It's above all the moving averages. So Apple is in the investment quality position. Then in retail also, you've had a lot of really good stocks. If you want to take a quick look at Under Armour, looks really good near the highs. Look at the chart here. The chart is showing relative strength above the moving averages. Target also showing relative strength above the moving averages, near the highs. Lulu decent. So there are some groups and some stocks that people that if they hold long term and you're a good stock picker, you can make money. But then also during an oversold move, if you timed it correctly, you could play the battered and bruised sectors.
Exactly, and the banks are one sector that has really been beaten up. And yesterday, they led the rally. We saw JP Morgan, as you mentioned in the morning call yesterday. It was kind of a buy the news event.
Yes, they've been selling it the whole entire time. Finally, they came out and said, okay, we have $4.2 billion loss. Stock was down 30 cents. And I said, if it can go positive and get some strength, perhaps that'll give the banks a bounce, and that'll help us get some of an oversold type move. So if you look here, yesterday, stock went positive, went green, decent move, close into resistance. I still think, like right now, if you took it yesterday long into closing on the highs, sell some into 32.50, and I do think it's going to be really hard for this thing to get to 34, 34.80. So for right now, it's just a tactical trade because these banks, to put longer term money to work, still have a lot to prove.
Right, in gold, we saw you've been in the gold, and it got a good bounce from Friday, and today it's looking like it's going to be another up day.
Gold triggered or gold ignited on Friday, so I wanted to measure the commitment. So I've been in it since Friday, trying to think, can it break this intermediate downtrend? If you look here at the chart, you will see this was Friday. It's been holding steady, not giving you much reasons to get out. I was hoping that I could add to it through this area, through this 158.30. So we'll see. If it holds above it, I think some people it'll breed some confidence. Next big level in gold or the GLD is around 160 to 161.5. Obviously, if you've been holding this thing, you've been battered and bruised. If you've timed it, and you got out at this outside day or out when it broke this trend line, you have have the luxury of buying back in here for what could be a nice move to retest this 161 zone before figuring out whether or not it'll really be on top of its game.
Well, we're going to get deeper into some of the stocks that we mentioned already, and we'll talk more about the haves and have-nots in the long version, so stay tuned.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.